everyone. Welcome back to our Morning Kappa at 8. I'm Joseph here. So looking at the market, right, you can see that the Hang Seng is moving sideways here. Now, before I continue, I just want to share with you some of the latest news that the market is looking at. This morning, when I wake up, right, so the first news that I look at is that US have paused the attack on Iran for the second consecutive sessions. And Iran also branch out the olive leaf and saying that as long as the US stop bombing Iran, right, Iran will also stop attacking those commercial tanker, right? So looks like the US and Iran are willing to sit at the negotiations table again, right? And as such, this morning, you could see that the oil price have come to corrections. The oil price have dipped below or come back to the 84 dollar per barrel again, right? So we shall see what's the development over here. And I think as long as the oil price pull back, right, market should see some relief on the stocks, and we can actually look at some of the risk on counter again, right? Meanwhile, if you're looking at the energy counters, oil-related counters, then you have to be a bit careful, right? As the oil price have pulled back, right? Commodity prices may move in tandem on a lower low basis for this week, right? Until the conflict re-escalate again. But at this juncture, right, our oil price have a very sharp pullback on the Friday sessions. And also this morning, right, I can look at the US oil have actually pulled back quite a lot, right? And then on the Friday, right, Trump have slap or impose a tariff. This Section 301 on the 60 economies, and good to know that Malaysia we only right at 10%, right? With another 16 countries, even Singapore is higher than Malaysia, right? But according to the minister, saying that Malaysia we can actually tide through this tariff, and negotiation is still ongoing. Right. Meanwhile, Trump also posted in his social media that he's considering to impose a larger fines on EU after the EU have imposed fines on the US tech giants such as the Google. Right. Also, in the past, they have fined the Apple, Meta, and as well as Amazon. So right now, the relationship between the US and EU come to a strain again, right? So I think market will be watching two development this week. Number one is the oil price, the negotiations between the US and Iran, and another thing that actually everyone will watching carefully is on this tariff, right? But good to know that the tariff is between 10 to 12.5%, and this tariff is actually imposed on the basis that those import goods have the forced labor elements. That is why Trump have imposed this Section 301. Right, and looking at the US Hong Kong market, right? So the market is consolidating, and look at what will happen on the tariff. But over the week, can see that the tech stocks have start to profit taking, right? But some of the tech stock like Lenovo, right, is still moving higher, especially the banking stocks are holding up quite well, right? And in terms of trading, we do see opportunity in TCL Electronics 1070, that the counter have moved above 16 Hong Kong dollar. Next R1, R2 is 17 and 18, and then stop loss points are 15.20. Now, secondly, we have the bank counters, Bank of Communications, 3328, climb above 7 Hong Kong dollar 30 cents, and next resistance will be 760, followed by 790. Downside support is at 7 Hong Kong dollar, right? So these are the two breakout stock, TCL Electronics, followed by Bank of Communications. Then on A50 have consolidation so far. Right, based on last week price actions, it managed to climb above the 20 days moving average, but it has yet to cross above the 200 and also the 50. Right, consolidation is still in play, but nevertheless, right, last week we do introduce a strategy which is buying near support on the counter trend rebound. So one of the counter that under my watch list is this stock code 000021 Shenzhen Kafia Kaifa technology, right? Shenzhen Kaifa technology that these counter have climbed above RMB 40 and moving towards 44 RMB and followed by 48 RMB. Now support is at 36 RMB. So you look at the um, China A shares are usually the momentum is quite strong and usually they follow through. So over here we do see a counter trend rebound, bullish candlestick with long shadow, and it's actually moving higher right now. So if the momentum persists, likelihood to reach R1 and R2, right? So you can actually look at the China A shares. Now, if you are a momentum trader, you like to look at stock on the breakout, right? That's where you can find a lot of opportunities in the China A shares, right? And now, as for apart from the crude oil have a pullback, right? Looking at the S&P, right? S&P last week, market do actually have sharp corrections after some of the tech companies have released their results. But as mentioned, right? I think the market will be looking at what's the development on the tariff and also the oil price, right? And right now, the S&P is consolidating between 7,005 and 7,003. On the downside, a very strong support should be a 7,150, which is the May low. Today we are in the month of July, right? But I do see that May is a very strong support on the market. So as long as we don't break the May low, right? Post consolidations after the market consolidates, it should actually move higher. Now, this week there are 2 or 3 events that also market will be looking at the central bank. Firstly, is the US FOMC meeting. Then on the UK also have their central bank meeting, and then last but not least on Friday, right? The Bank of Japan is going to have their interest rate decision as well. So all these central bank decisions is going to move the market sentiment on the year end, this interest rate, and interest rate will move the forex will move the stock market. So now if you're looking at market recently, right, and the Asia hour, right, we are being affected by the Kospi as well as the Nikkei, right? So this Friday, Bank of Japan decisions will again move the market. But as of now, Monday to Thursday, I think more likely people will be looking at the oil price, the tariff, and some of the tech stock movement, especially tonight, right after we learned that the US has stopped bombing over the weekend, right? And let's see what's the oil price or the counter will move like. And you notice that US like to start a bomb in the weekend, and also they like to stop the bomb on the weekend, right? So let's see this Monday evening what happened to the US market. And look at the Malaysia market, we have a very strong rebound on the technology sector last week, went up by 4%, construction 1%, and the transportation 1.4%. Now, only plantations, telecommunication, and financial services experienced some outflow on the front, right? And FKLI will still keep a bullish bias despite that last week it do have some profit taking. Now, downside, we set our stop loss at 1680 and we keep our bullish bias intact at this juncture. Now, FCPO do have some mild profit taking and printed a shooting star last Friday, but the FCPO have climbed above 4,007. It showed that recent momentum is very strong, and we changed to a positive trading bias with our stop loss at 4530. So last week, I think market is clouded by this threat of the higher oil price on Monday to Thursday, right? And as such, you see the market have a risk-off sentiment on the back of a higher oil price. But as of this morning, right, the bombing has stopped, oil price start to pull back, and I think generally market should see a strong rebound this week. Whichever stocks that actually have a strong corrections last week, it should move up this week. As for last week, those counter that actually went up due to the higher oil price, like PCAM, Heng Yuan, right? Unfortunately, today may see some corrections on the lower oil price. So, if you have trading PCAM, Heng Yuan, you must be a bit careful, right? Meanwhile, I think funds once they are risk on, they are going to go for the blue chip again, especially you look at recent the stocks that actually lift up or index public bank, right? Should see some activities, right? I think Apart from public bank, we can actually look at some of the utilities counters as well, right? Meanwhile, tech stocks should continue to see some sort of support. You can see that last week, right? Tech have a very strong rebound, and right now it's have climbed above the 20 days moving average. Now, again, if you are looking at tech stocks, right, you can set the May low as a support level, right, in tandem with the US tech S&P, this support level. So as long as the tech counters that you're trading, they don't fall below the May, I think overall tech is still showing a bullish setup right now. Okay. Apart from the tech counters, last week I do mention another constructions company, which is Gamuda. Look at the price volume profile. Gamuda have climbed above 4 ringgit and 30 cents, and last Friday, that was a long lower shadow. It means that during intraday, there was a very strong selling pressure, but the smart money is taking the opportunity to accumulate Gamuda when it actually fall on Friday. That's why there's a very long hammer here. It shows that there is a smart money buying Gamuda between 4:30 and also 4:15 over here, right? So if you are just like me, you think the market is risk on again, that's where the smart money coming back to the market, right? If you look at a big cap like Gamuda, right, then on we should see next R1 at 4 ringgit 45 and followed by 4 ringgit 60. Downside support will be at 4:15. Okay. So apart from the Gamuda Constructions, we have another tech stocks this morning, Vitrox that climbed above 7 ringgit and 85 cents. So after a breakout, Vitrox eyeing to test 8 ringgit 50 and followed by 9 ringgit and 15. Downside support is 7 ringgit and 20. Vitrox is going to announce their quarter result this week, somewhere later part of the week. And then on Pavilion REIT have climbed above 1 ringgit and 75 cents. Heading towards 1 ringgit 90 and followed by 2 ringgit. Downside support is 1 ringgit and 65 cents. So we have one breakout stocks, Vitrox, and followed by Pavilion REIT. So I'll stop here and pass on to Yong to walk us through on the weekly economic update. Thank you.
Thanks, Joseph. Let me share my screen. So, morning, everyone. Joseph has just now pointed out what happened in the US and Iran front, and we continue to maintain a cautious stance as the Middle East conflict continue to heighten the market uncertainty. And consistent with this backdrop, our revised IHP Center-based sentiment index once again continue to suggest that investors are again shifting toward more cautious stance. If you look at the black line over here, which is pointing out and suggesting a slightly risk off as market continue to remain cautious on geopolitical concerns and also the periodic sell-off in the AI-related equities. So we continue to advocate a tactical overweight in safe haven asset and a short-term underweight in the positions over next 2 to 4 weeks as a risk appetite is likely to remain under pressures. If you look at FOMC meeting, which is on 30 of July, we continue to suggest that FFR will cap at 3.5 and 3.75, with no change. And if you look at the market pricing for end of this year, it is already putting toward 1.8 high compared to 1.2 in the previous week. So this suggests that market is more cautious on the inflation outlook when there's escalations in the drug protection likely push out the oil price. So we don't rule out further US dollar strength should the drug protection persist because despite there's a stop fighting for a short period, we continue to see a high volatility. So if you see in what happened in June, despite there's a ceasefire negotiations, but conflict continue to maintain. So this remain very highly uncertain. So this could suggest that uh, things can change in very short while. So if you look at next on ECB on last week actually hold their policy rate unchanged at for deposit rate at 2.25 and main refinancing rate at 2.4. So market continue to see a hawkish stance, citing there's a need to maintain the restrictive monetary policy unless inflation moderate decisively. So the ECB president also noted that the risk to inflation remain due to the upside, while market suggests that policymaker see a scope for rate hike as early as September. So we think ECB also shift toward the hiking path. For beyond the US FOMC, we have several key data to watch for this week, including US advanced GDP for second quarter, inflation print, as well as some data from China, including the industrial profits and PMI. That's all from me. I will pass on to the next speaker. Thanks.
Yeah, hi, good morning. Today we've got a report on plantation sector, just talking a little bit about the recent event that we had with the MPOB speakers talking about El Nino, as well as the outlook of CPO prices. So just let me as a background, just let me touch on what's the latest forecast from the US NOAA and the Australian Bureau of Meteorology. Now they're both saying that the forecasts are pointing towards a strong to very strong El Nino event, with 23 out of 26 models indicating that this event could peak at levels amongst the highest observed since 1950, with a 97% chance of a strong or very strong El Nino during October to December. So the Indian Ocean Dipole is also now in positive territory. The last month when we spoke, it was at minus. Now it's back. Now it's at positive 0.25 degrees Celsius. And in order for El Nino to be considered very strong, it needs to have two consecutive 3-month averages of more than 1.5 degrees Celsius. So we continue to wait for a confirmation of the strength of El Nino. We should be coming, pretty soon. The MPOB agronomists at our event said that during El Nino, average FFB yields typically drops 10 to 14% in the first year, with an additional 3 to 4% decline in subsequent years if the dryness persists. While rainfall is currently still being observed, they are expecting El Nino-driven dryness in Malaysia to peak between October to January 2027. And MPOB thinks that this year's episode also will be strong, mirroring the very strong 1997-1998 episode, and that one lasted for about a year. So once stable rainfall patterns resume, it typically takes about 2 years for FFB yields to recover to normal levels. In terms of the regions expected to be impacted more, these include Negeri Sembilan, Johor, Pahang, and Sabah, where they mentioned that historically Johor and Pahang have often experienced synchronized rainfall deficits, and the east coast of Sabah is probably the more vulnerable area in Sabah, where it generally experiences stronger seasonal dryness versus other parts of Sabah. The other speaker talked about, CPO prices outlook, and mentioned that, they believe CPO prices have transitioned from being a purely supply demand driven a commodity to one that is also policy driven, particularly driven by energy mandates like the Indonesia's B50 mandate, which will require 18 million tons of CPO annually, and that represents over 35% of Indonesia's total production. So for this year, MPOB is looking for average CPO prices to be ranging between 4,003 to 4,005, and they don't expect prices to drop below the 4,000 ringgit per ton mark in the short term. It also anticipates that El Nino impact will come through in the fourth quarter of the year, where they are now looking for Malaysia's 2026 production number to come in at a -2 to 4% decline. Year to date, June, we are up 0.6%. So despite the tight supply, MPOB does believe that the current catalyst of El Nino and B50 are somewhat priced in for this year. Although for 2027, when the weak production impact starts to come through towards the year end of this year, they do think that there could be another price spike in 2027. So we're making no changes to our overweight call on the sector. Our price assumptions are currently being reviewed for 2027, but for 2026, we're keeping it at 4,400 ringgit per ton. Our share price, our target prices and recommendations are also currently under review. We know that there are some that have already shot past or close to our target. So we are also currently reviewing those recommendations and target prices. So we're keeping to our overweight stance on the sector. Our top picks continue to be Johor Plant, SOP, Hub Sing, IOI Corp, and SD Guthrie in Malaysia, and in Indonesia, Triputra Agro, and in Singapore, First Resources. So that's all that we have for today. Thank you for joining us. Happy trading, and see you again tomorrow, 8 a.m. at RHB Morning Kappa.